Good morning. Welcome to the most underrated show on YouTube. The Fed has some news out today. Also, we have some breaking news, and today is the 1-year anniversary of Everything Money. All right, guys, smash that like button for me, and let's get going. As I said, today's a 1-year anniversary of Everything Money, according to Llewellyn and Dads with a Purpose. I didn't know this. Also, the Fed is speaking today, so the volume is going to be rather light, and until about 2 o'clock, 2:30, probably until about 2:30. They'll put out their notes at 2 o'clock. You'll be able to read them and try to digest them, and then Jerome Powell will come out and speak at about 2:30, and chaos will likely ensue, and then the world will come back to normal tomorrow. One of the best comments I saw in here was from Joseph, who is currently on a roof. He said, what did he say? Powell will say Bitcoin is fully owned by the Fed. Armageddon will ensue. I like that one. So I'm going to wait for a little bit until we get more people watching. But we do have breaking news coming out of Everything Money today. It's different. I didn't think it would happen, but it's happening. So I'm going to wait until a little bit longer, and then I'll break the news to you guys. And some of you will be sad. Some of you will be happy. But it is what it is. All right. Where are we going to start today? So I did not have a lot of time to prep this morning because of chaos. And so I didn't highlight anything. But I'm going to read stories anyway. And here we go. Hello, Matthew. FOMC preview. Inflationary pressures tempt the taper talk. And of course, the taper talk is the Fed trimming back the $120 billion of quantitative easing that they've been doing every month since the coronavirus pandemic started. And there are talks about trimming that back. So we will see. All right. So the Fed, of course, we're seeing the larger than expected inflation numbers. And the Fed did say that by the end of 2023, they expect to see a consistent 2% inflation with, and that's when they would start increasing rates and such. So obviously, with what we're seeing with the slower pace of jobs numbers, we're seeing really high inflation coming in. May to May of 2020 to 2021 is up about 5%. So that's where we're going to see that. So the Fed has last policy meeting in May, several Fed officials voiced interest in taking a step towards slowing the central bank's $120 billion a month pace of the U.S. Treasury purchases and mortgage-backed security purchases. So, of course, the different Fed presidents are a little bit torn. Some say, yes, we need to start trimming now. Some say don't trim at all. I can't remember if it's in this story or the next one. They put up a dot chart, and it's pretty interesting. So there are risks of inflation. Now, of course, Jerome Powell, and I'm sure there's other Fed presidents that are saying it, that the inflation is temporary. I still don't really think the inflation is temporary, just with the continuous amounts of shortages that we're seeing in so many different industries across the world, frankly. And now we're already talking about, I saw some news stories out of China yesterday that shippings are going to be delayed there. I know they're having another little surge of coronavirus over there. I can't remember what cities it was. I thought it was into maybe their major cities, but that's those kind of things just lead me to believe that we're not going to have this quote unquote transitory inflation. So a Bank of America survey done last week noted that 60% of global fund managers do not expect the Fed to signal tapering until August or September at their meeting in Jackson Hole. Now, of course, I think that they are going to wait until that time frame for different reasons. I think they want to see the unemployment and the jobs numbers that are going to be coming in after the summer's over, just because all these states are starting to trim out their pandemic stimulus. So that's when I think that we're going to start seeing the true jobs, unemployment numbers and jobs numbers that are happening in the country. So that's that. Rate height. Here's the dot chart. So this is the dot chart, and this is coming from the different Fed chairs. Let me see if I can blow this up a little bit. So this was from, when was this from? I think this was from the last meeting. Yeah, this is the March 2021. So you could see that right now we're keeping interest rates at zero. There were some Fed presidents that said they would move up the interest rates in 2022. A larger consensus started moving in 2023. And then in the long term, I don't know what they mean by long term. I think they mean post 2023. You could see that they're expecting interest rates between probably around that 2.5% area. So, yes, Stock Mo meets Trader Mo. Okay, I couldn't have a conversation with that human being. Inflationary is transitory or not? I'm pretty much going to omit this article because I really think that I just said the line that I needed to say. But here with inflation, gasoline prices are wildly increased. Of course, with everything that's going to happen with, they're saying that barrels of oil are going to keep going up through the end of 2022. So that's going to increase the price of gasoline even more. Used cars were up 21% at the end of April. Now they're up almost 30%. Transportation's up. Everything's getting its bump. Of course, wood was up like 300 some percent. So the lumber thing might correlate with the what am I trying to say here? The housing market. You never know. I mean, if we're starting to see the housing come down. We're starting to see the lumber prices come down. We might start seeing the housing prices come down. All right. Let's see here. Let's do cruises. Let me close some of this stuff. So cruises with Carnival, of course, we know that they're going to start sailing again, and their stock is being upgraded. So look for a little bump in that. What is the Carnival stock price at right now? Because I would like to know. Let's see, CCL. Oh, wow. Okay, this thing was at, when was this? Let's go back. Yeah, back in early June, it was almost touching $32. All right, cool, interesting. I don't know why it pulled back, but I wonder if it's going to get some kind of bump today. All right, let's see here. Oh, look at that. Paul just texted me. We just hit 48,000 subscribers. So those of you that just subscribed, thank you for doing that. And whoever became the 48,000th, YOLO. All right. Early signs of customer demand for return of vacations to sea should make them more bullish on cruise stocks, according to this research poll. What is this? Okay, this is great. All right, let's just. All right. Anyways, this was a short story. Actually, yeah, this was a short story. Regardless, they upgraded them. Of course, I think they're going to start sailing in July. The great thing the thing that I really like about CCL, let me just pull up a chart and show you, because it's not all about the charts, especially when this is a value play the way that I'm playing it. But let me just show you. So what I really like about this is these were the highs. Where's my pen? Man, I'm a mess this morning. We had some issues this morning, so I didn't really get to prep for the show like I wanted to. All right. So this was your pre-pandemic high, and then it went to its low. The thing that I really love about Carnival is it didn't just go up here, because let's type in Royal Caribbean. I think that somebody give me that ticker symbol real quick. Is it RCL? I think it's RCL. Royal Caribbean. Let's see what they did. Okay, they're in the kind of the same boat. What's Norwegian? Norwegian is okay. They're in the same boat. So I like that. I like that it didn't do this, which is the airlines started out here, went to its pandemic lows, and then all of a sudden, boom, it did this, and there's still people. Now there are people flying, but in all of this, there were no people flying. I mean, and not only, it doesn't matter that people were flying, it doesn't matter that they were not collecting. Their revenue was down, everything was down. They were diluting themselves. They were burning through cash like nobody's business. United Airlines, they were losing the most money out of the major airliners. Oh, okay. They kind of did okay. They didn't recover wildly. I still don't think they should be here, but you guys see what my point is. So, Issues, what's her name? It was not Lady Issues. All right. Let's stick with the travel stuff. Hertz shares are rallying as rental car companies prepares to leave bankruptcy. So, everybody thought Hertz was going bye-bye. And they're back. I mean, I think they have to be the largest rental car, or one of the largest rental car people in the country, if not the world. Let's see. Hertz shares have been rallying. So this is a good one for you guys to go ahead and maybe day trade and just see the direction it goes. Investors have been appearing to attract Hertz because of strong rental car pricing. At this kind of valuation, Hertz shares rose 23 cents or 3% on Tuesday after hitting new 52-week highs. So keep a watch on them. I'm not saying go crazy, but maybe this is one. What's their ticker symbol? HTZ. Are they in the market anymore? No, they're not. They have to be over the counter now. Hertz is crap. I don't know what's crap and what's not crap in the rental car world. I've used all of them. They're all exactly the same to me. I've used Budget. I've used Hertz. I've used all of them. They're literally all the same. So, okay, so they are expected to be about 470,000 shares, 470 million new shares outstanding. So they're going to dilute themselves a little bit. I mean, they're going to do whatever they can. They're OTC. Thank you very much. So I don't do OTC stuff, but if you want to go at OTC, have at it, baby. All right, let's do China to release metal reserves in effort to tame commodities. I didn't know that they had metal reserves. I didn't know there were any reserves around the world, so that's interesting. China said it would begin to sell its major industrial metals from its stockpile, an effort to squelch factory gate price increases that have hit a 13-year high and strokes of fears of global inflation. So that's pretty nice of them. Berkshire Hathaway, yeah, they're nice. As the world's biggest buyer of a range of industrial commodities, China is using its market to try to quell the sharp rise over the past 12 months. All right, so that's great. So keep checking out the commodity market. If this is depending on the amount that they put into the market or the news that it just kind of sparks with the market, maybe you'll start seeing your commodity prices pull a little bit back, because a lot of the reason that the commodity market has spiked so much is because of the supply and demand. So we're seeing things like copper. I think they said silver in this article. I don't think they said gold in this article, but different commodities. I know they were talking about sheet metal and whatnot. So just keep an eye on the metals and which direction those things go. But those are probably a good one for you guys to throw on your watch list if you want to. All right, this is a cool story. I love this stuff because I like tech and I'm a tech dork. And the less I have to do, I told you guys the story about Apple coming out. Was it last Monday? Maybe it was the previous Monday. I'm not really sure. But before I get to this, that's a great question, Ron. Why would it benefit China to do that? That's a great question. That's something to dig into. Not for any other reason than just curiosity. I would like to see what the play is for them, because I do agree with you. It seems like they would not want to do that to keep increasing the prices of commodities. So I do agree with that. Let's just dig into it a little bit, Ron. Let me know. I'm interested to know that question too. Frankly, not necessarily even how would China benefit from it. If any country did it, what would the benefit be? You would think that they would want to hoard supply and keep increasing the prices, but I digress. All right, Amazon. Oh, getting back to what I was saying. So Apple said that they were going to start creating, you can have your ID on your phone, and you can have your credit cards on your phone, of course, with Apple Pay. And now we're kind of starting to get everything on our phone. So hopefully wallets are getting phased out, because I hate wallets. By the way, public service announcement. Apple yesterday or Monday was hacked in their iCloud password keychain, and I guess 8 billion passwords got stolen or hacked. So I was going through my passwords, which ones Apple suggested that I should change, which are hacked. It was a lot of passwords that were hacked. So PSA to you, if you want to go to settings and you can go to security, I can't remember the name. Just go in your preferences. Google the story, you'll find it. Amazon will open its doors to a grab-and-go checkout less grocery store on Thursday. So this is pretty sweet. Amazon Fresh is opening a grocery store in Bellevue, Washington on Thursday, June 17th, that will offer customers a chance to grab and go without standing in a checkout line. So the newest feature will just be Just Walk Out technology, where shoppers will be able to place things in their cart and leave the store without stopping at a cash register to pay the bill. Instead, shoppers can wave their palm or scan a QR code on the app, or use a credit or debit card upon entry. Customers repeat the mode of payment on their way out the door and receive a digital receipt on their Amazon account. That's so cool. So this is so cool. Let's see. Is this where I was wanting to look? No. Hold on one second. It was pretty cool part of the story. Pay by palm. That's just kind of weird. including. Okay. Yeah. So once our customers have embraced self-checkouts, as they've rolled across the country over the past few years, we've also been enhancing self-checkout lanes at the kiosk. So they may have been trying this at they could have been kind of sneaking this into the Whole Foods thing because they bought Whole Foods maybe 2015, something like that. So this is pretty neat. I like it, but okay. All right, let's get to the Lordstown story. Now, I'll do the story first. Lordstown Motors jumps on Outlook production through May. So of course we know that they said they might not be in business after next May. So Lordstown jumped after saying it has enough money to make its battery-powered truck through May of next year, parring a record of decline of previous days. Okay, so yesterday the shares were up 11%. This is a very stable stock because it just plunged 19%. This is not very new. Their swings are not very news related, so this is good. Okay. They don't have a CEO. They don't have a CFO as of this moment of the news story. The company now expects to build 15 to 20,000 vehicles with cash on hand through May of next year. After production, we will still have over $400 million in the bank, and so we don't have to worry about issues of funding. And just Monday, they said they had issues of funding. This is a surprising number that I saw. Lordstown pickup will cost around $55,000. What is this thing not going to have in it? That's my question. I mean, you look at all these pickup trucks that are coming out, all these EVs. Now, if they said starts around $55,000, I would have said okay. But the cost around $55,000 because the new Ford truck is going to cost $90,000 for the Platinum Edition. So maybe they don't have a Platinum Edition? I don't know. All right. Anyways. So I do have breaking news on Lordstown, and I'm being serious right now, guys. You guys know Paul's one of my best friends. He lives by me. I'm buying his house. His brother's one of my best friends. And we've worked together for a long time. And we'll still do investing stuff together, but Paul is going to be leaving Everything Money, and we're going to put out a video I don't want to explain it, so I want him to explain it. So he's going to come out at what time is it now? 40 minutes from now, 10 o'clock. There's going to be a video that's going to come out on YouTube, and he'll explain where he's going, why he's making the move, this and that. You guys know that Paul, he likes to start businesses and he likes to move on. So he's finally, he feels like he's gotten this to a good place, and he's going to go. So he'll tell you at 10 o'clock. That's all I have to say. So you guys stick around for that, and yeah, we'll go from there. All right, let's go to stocks. Whatever you guys want to talk about. Give me some stocks. What is WHAT a stock? Okay. Ride. We'll do ride for Lordstown. Let's see what Lordstown is doing. Okay, am I melting the internet right now? Jesus. Calm down, people. All right. So, downtrend. This is not something that I would be getting into unless you're on a 15-minute chart. All right. How do I feel about it, Mo? I mean, I get it. I mean, when you see the move that he's making, I understand why. It makes good sense to me. So, all right, Walmart's still down. Downtrend. You need an engulfing candlestick. That's all you need right there. Let's see here. I'll do Alibaba. I don't usually like to do Alibaba, but I will do Alibaba. He's going to an understudy of Kathy Wood. No, he's not. All right. Let's see here. Alibaba. So the problem with Alibaba is this is a dog stock right now, and you could tell it's a dog stock just because your stochastic is down here not really doing anything. So let's just don't do anything with Alibaba. That's all I have to say. I don't want to do stocks right now. You guys, give me a few minutes and I'll do some other stuff real quick. I want to look at the Treasury yields. This is going to be important to keep an eye on. So we saw yesterday that Jamie Dimon said that he's hoarding cash. Well, he's not hoarding cash. Well, he might be hoarding cash, but JP Morgan is hoarding cash in anticipation for these Treasury yields to start increasing. So a lot is going to depend on what the Fed does. And as you can see, our rates are dropping. They're slowly starting to tick up, but basically they've done nothing. I mean, they've been nothing but fall 11 bips over the past 15 days, 14 days, 10 days, whatever. So the 3-month is the number I want to keep an eye on, because this 3-month is where I want to put cash that I have sitting in my account. 90-day treasuries. Yeah, that's that. All right. So if you want to, Everything Money, patreon.com/everythingmoney. We are eventually going to move to our own website, everythingmoney.com. But right now, if you want the software, it's here for $24. If you want access to me and the Bid and Ask Nation, I am going to be doing a seminar on Saturday at 9 a.m. Eastern time. It's going to be a trading seminar. So if you're not in the Bid and Ask Nation and you want to join now, because you can get in, you can watch all of the Trading 101 series. And then when I do the seminar on Saturday, which is going to be about an hour and a half, you can have a little bit of more of a clue of what I'm talking about, get the terminology down, this and that. And I think that will be a lot more beneficial for you. So go ahead and jump into the Bid and Ask Nation now if you want to be a part of that thing. Okay, so, and then there's also this. I assume this is not going to be here for very much longer because he's leaving. But if you want to do a real estate deal with Paul, you can email him at his new corporate email address and go from there. So now I'll do some stocks. Give me some more stuff. Peloton. I'll do Peloton. I'm not trying to pretend nothing is happening. I just told you what's happening. Logan. How do you think I can keep a straight face if I'm not, it is what it is. I don't know. People move on. All right. Peloton, of course they had that. I think this was all that rough time where they had where their things were injuring people. And then they're having a little bit of recovery. So you can see that they're just consolidating right here. They're just stuck. This is a strong resistance point that they are going to have to blast through, but they're going to need volume to push through. Why don't we just take a look at the volume real quick on this? Let's see here. Okay, so what's the volume? So the volume is awful. This is all terrible. And you can see it's just stuck right between its 100 and 200-day moving average and its 50 and its 25-day moving average. And it just keeps bouncing up and down and up and down. It doesn't have anywhere to go. So that's that. How is Seth taking the news? Well, Seth is the most emotional person, so I don't think he's going to take the news very well. Maybe. I don't know. Momo. Okay, so I actually liked this the other day, and all it's doing is snapping back. So you're getting a nice little run on it. I don't know what the moving averages are doing. You have a great trend moving up. Now all this is a snapback. This is why investors lose a lot of money. Stock price moves up on you, and then this happens. You get a little bit of a pullback, and everybody's like, "Oh my god, I'm going to start losing money." You're not. It's just a snapback. This is what happens. All you're doing is creating these. Let me pull up a line chart. All you're doing is creating these W formations, like so, up, 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 higher lows, higher lows. So this one is just a big run, pulling back, and it's going to do something like that, hopefully, for you if you're invested in it. See, up, down, up, down, up, down. See, and that's how you create these things. So you need pullbacks on this stuff. All right, let's see here. What else do we have? Disney. Smile Direct Club. Chris, I gotcha. We'll do Smile Direct Club. Disney's in a world of happiness. Actually, they're not. They're consolidating hard, and they are just stuck at this resistance point where they cannot break through. And this has been dating back to December of 2020. They had a little bit of a bump. This is probably from their Disney Plus things, but I don't think you can run a company on $5 a month. So here we are back here. Remember, 40% of their revenue. You want to talk about something goofy? That was a good one. That was not pun intended. All right. You want to talk about something goofy? This is a company who shut down all their parks, shut down all their resorts and all that stuff. And they went from here, and that shutdown of their parks and stuff was 45%. Parks, cruises, whatnot, 45% of their revenue. And in that time, 45% of their revenue, boom, they moved to all-time highs, and then nearly back at all-time highs. Yeah. So Disney is weird. What did I say, Chris? I said I was going to do something for you. I know it was Smile Direct Club. I can't remember the ticker. SDC. Smile Direct Club. Speaking of Smile Direct Club, I have a dentist appointment today, which is lovely. I love going to the dentist. I try to go 4 times a year. Not right now, Mo. We're processing. Yeah, I'm processing too. I told you there was issues this morning, and there's your issues. Now you know. That's why I didn't have anything highlighted, and why I'm just kind of winging it the whole show. Hopefully you're not noticing, but you're probably noticing. All right. This is this very dating back to, what is that? October. This is a very strong support/resistance level, and you can see that they're unable to get through that. I'm actually, what price is that? $10. Let's call it $10. I want to go see if there's a moving average there. I have not looked. Let's see, $10. Okay, so it's not necessarily right at it, but you can see that the 100-day moving average is right there, kind of. And the 100-day moving average kind of was right there for a very long time. 200-day moving average. So, yeah. What are we going to do with this? Let me go back and just give you something. Guys, if you want to know how to do this, this is so easy. All this is so easy. It's just the same thing over and over. Go to the everythingmoney.com. I'll go over here. Patreon.com/everythingmoney. Join the Bid and Ask Nation. This is so easy, guys. We have about 600 people that are doing this, but all right. Stay on what? All right. You guys are no good at this. All right. Paul is leaving the pineapple business. Let's see here. Hold on. I wanted to see somebody said something. Oh, what time does the Fed speak? Miguel, Fed speaks at 2. No, I'm sorry. The Fed releases their notes at 2 p.m. The Jerome Powell speaks at 2:30 p.m. So if you want to listen to that, go ahead and stay, and go ahead and you can catch it anywhere. I'm sure it'll be on any news network. But you could find it on. It's going to be on the cover of Yahoo Finance. You can go ahead and do that. So, all right. Yeah, that's it. Is the market open yet? The market is open now. Let's see. All right, Recon. I'll do Sprouts Food for you. SFM. Let's see. Okay, they're down 1%. Let's see what the deal is. I like Sprouts Food. I think that's a good market. Oh man, where were we back in? Let me see here. They've had an interesting run. They've had a very interesting run. Let's see. So they're making all-time highs. You need to break out. The only way that you can get into this thing is if you go in, move, and break out over. That's exactly what you're going to have to do. So no news, create your own. Boy. Let's see. HRB. Let's take a look at HRB. I think I have puts on H&R Block. Let's see here. H&R Block. Oh. Okay, so let me zoom back out what we're doing. So the thing is, you have a strong resistance point here that's dating back to, when is this? December of last year. Yeah, why don't we zoom in and take a gander here? Oops, let's take a gander here. Dun, 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 dun. All right. No one can tell when Mo is being sarcastic. All right, for the record, that was sarcasm. All right. Yeah, it's gapped down a little bit today. I want somebody, whoever said HRB, is there earnings today? Is there some news that came out? I'd like to know that. No, there's not earnings, because I was looking at the earnings chart yesterday, earnings calendar yesterday. All right, well, the only way that you can get back into this long is to break out, make it a new not all-time high, but a long, maybe annual high, whatever it is. Yeah. All right. That's it for today. Guys, Paul's not leaving. I'm joking. Go to, if you want to join the Bid and Ask Nation, if you want to be part of the the seminar on Saturday at 9 a.m., jump in, join, start watching your Trading 101 series videos now, and that's it. So 10 o'clock, 10 a.m., 27 minutes from now, there's going to be a video released. You're going to see it, and that's it. I will see you guys tomorrow. Those of you that are in the bid, the what am I trying to say here? The top 2 tiers. I'll see you tomorrow at 2 o'clock. Peace.